All right, traders, it is time to prepare to trade the best setups at the best prices. Had a good day trading, making a little bit over 5 figures on the day. I'm going to be recapping some of the trades that were made along with the price action analysis, and I'm going to be preparing you to trade the best setups at the best prices heading into tomorrow. Let's get straight into the analysis. So in terms of yesterday's video, our main play was Tesla. That was such a key play, man. If you watched yesterday's video, we had discussed that basically once Tesla, turns this 267 level into a support level, we made this very, very clear within the video yesterday. If you go back, you can visually see that Tesla stock was closing the gap right here, and the gap was aligned with previous resistance. Previous resistance was at 260. It filled the gap. It began to reverse. It began to turn that previous resistance into support. And as you can see, once it breaks above 260, it has massive upside potential. Plus, we have a gap to fill above at 291. So I made it very, very clear that if you see, this 260 resistance break out, react as a support level, basically it's going to continue to run on the day. Was there a bullish confirmation to get in calls on Tesla stock today? Yes, there was. You can visually see right here, it broke above our key 260 level. It broke above the previous closing price. And then once it had a pullback, it formed a bottom bullish wick, just like it did right here at the same level, a bottom bullish wick. And then it continued to go higher, and then it continued to go higher. So yes, there was confirmation, because not only did it break above 260, our key level, but it turned it into support. If you see a strong break above our key level to 260, and then it drops back, turns the previous closing price 260 into support, starts to bounce, that's your confirmation to get in calls. So that was a great play from the watch list. In terms of the SPY, overall good day trading the SPY. I had a crazy play on calls where I was buying 0 dates today at 9 cents. 3 cents above the low. They bottomed at 6 cents, and they went to 40 cents during extended hours. I sold those for an 80% return. I put in like $11,000 into that trade, and I flipped that to an $18,000 trade, making a $7,000 profit in literally 5 minutes. It was such a good trade. I'll go over that as well. But that was the main one that really put me on the map for today. It was trading during power hour. In terms of our levels for the SPY, you can visually see right here, this was the pre-market watch list that was sent out to members. So in terms of our levels for puts, 450, 470, major resistance. How did I come up with 450, 470? I was looking at the 30-minute chart, and I was simply analyzing. There is a gap to fill above at 455.20. Say it doesn't fill the gap and have a reversal. What would be a lower level where it's likely going to pull back? And you could just visually see there is so much major resistance that has not been tested at right here, 454.78. This is a 30-minute bearish wick. When it retests the high of this, it's going to try to pull back because it's major resistance on the SPY and it's close to the gap. That was a phenomenal level for puts, and literally towards the exact top at that 450, 470 level, towards that 455.20 gap. This is, once again, if you used my videos, you should have done extremely well on the day, because we made it very, very clear for put options. The worst thing you can do in this market, in a bullish market, is to buy puts and short SPY when it's at support. And we all knew there was support towards low 450s, right? And since it gapped up, that means it's going to try to, turn this 452 into support like it did on Friday. So if you targeted puts at 455 to 454.70, like we stated in yesterday's video, you should be up very, very nicely on the day. That was another good play overall. And then our levels for calls were 450 to 18, which never hit, but we were still, making money on call options with higher levels using the trading strategies. So towards the end, I'll recap some of the trades, I'll recap some of the strategies, but let's get into the updated analysis. So in terms of the SPY, what do we need to understand right now? We need to understand that this right here is trading towards the top of the channel. So what has happened? SPY has hit our key 450-470 level, and it's beginning to pull back. So our best level for puts maintains the gap at 455.20. There's a gap to fill at 455.20. That would be our key resistance level for puts. If that doesn't work out and we get stopped out, we'll have a very tight stop, like 50 cents risk max. We're going to be looking at 457 to 458. That'll be our next level we are looking at. Now, let's take a look and see how the daily chart looks. So in terms of how the daily chart looks, just taking a brief look at it here, this can either go either way, but what's going to happen is it's going to try to do something overall like this. It's going to try to have a dip and then rip for a strong close. So I want you to compare this candlestick right here on the left side to this candlestick right here. See how it dips lower and then it recovers. And then that's what it's going to try to do. It's going to try to dip lower and recover. So basically, the way that I'm looking at this daily chart is the best way to play this right now, since puts already worked at our key level and it's already played out and everybody already knows now that it's resistance because it reacted as a resistance. It already worked, right? And we haven't been in a market to be focusing on puts, but if you've been using our levels for puts, you should be doing fairly well as a scalper. Now, we need to wait for an oversold dip. I think that's the best thing we can do here. Wait to buy an oversold dip. So it's going to maintain at the following levels. These are the levels where we are going to be hitting call options with tight stops. So in terms of a level, right here, there's a gap to fill below at 452.18. We are interested in buying calls at that level, 452.18. And then in terms of the levels that have not been tested yet, it goes back to our previous videos. $450 is an amazing level for calls. 448.50, great level for calls. 447.50, great level for calls. Those are all of our levels where we are interested in buying call options. These are our 4 best levels. I am seeing something based off that pattern where it could go below 452.18. It is possible. So I would say 450 is our true best level for calls. So I want you to focus on the pre-market lows, the pre-market support heading into tomorrow. If you see any, bear traps getting created, focus on those levels as well. But those are our key levels where we're interested in buying the dip. So right now, you need to understand that we are towards the higher end of the channel. And our level as a scalper has already worked out. So if you keep on playing something that already works out, it's not ideal. It's going to be more of a battle. Everybody already knows about it. It's going to be less ideal to trade in more of a battle. So you need to take this as it already worked, and you need to be extremely careful with puts, and you do not want to be buying calls high. You want to be buying calls on an oversold dip. 452.18, 450 best, 448.50, 447.50. Those are our key levels, and that is our game plan. Very, very simple heading into tomorrow. Like I said, if you watched yesterday's video and executed the trading plans, you should have done very well, and you should have been up nicely on the day because our key level for puts hit, and those 455 puts are up very, very nicely. In the Tesla call out to buy Tesla calls, once you see that 260 is support, well, how can you determine if it's support? Just wait for it to break above our level, which was 260. I made it very, very clear. When Tesla stock goes above 260, wait for it to form support. And you can see it had a nice break above 260. Don't chase the breakout. When it drops back down, if you see it consolidating, you see it bouncing at our key level, starts to go up again, then you buy those Tesla calls. You should have been in right around here towards 260.50 to 260.80. You should have been in right here in between that zone if that's what you wanted to do, is buy those Tesla calls based off the bullish confirmation, right? So that was a great call out along with our put call out at 455, and that was all strategically advanced. So now I'm telling you to just ease the brakes a little bit. If you're going to try puts, use a tight stop. Keep an eye on that 455 level. And then for calls, I would suggest you wait for an oversold dip. 252, but best level is 250, and the levels below that 250, 249.50, 248.50. That is my overall thoughts. That is my overall analysis on the current market. And in terms of the daily chart and the pattern that's playing out, like I said, anything can happen with this daily chart pattern and what I'm seeing. It could break out or whatever, but I don't like buying calls high. And puts already worked out, so I'm easing the brakes on puts. I don't give a fuck about puts. It already worked out. For puts, you have to go at levels that have not been tested. Our key levels have basically been tested. You can keep an eye on 455, but I'm seeing patterns where the real play and the real money is going to be to wait for a bullish dip and then buy the call options at our level 450. That would be such a good play. And like I said, for puts, if you're going to do it, this is what you need to keep an eye on. Keep an eye on 455.20. We still have a gap to fill at 455.20, and keep an eye on 454.20. For this to get wrecked and for this to have a nice little drop before the bullish recovery, they need to crack below 454.20 and turn into resistance, right? So just understand where I'm at. Right now, it's looking a little bearish. They're going to try to drop it. The real play is going to be buying the oversold dip on calls that has not been tested yet. The bears are going to attempt to rug pull this. They're going to attempt to drop it first overall. It's just it's already played out and it already had a nice little drop, but that's where we're at. So we're not in a current price range to be focusing on calls all the way at 455 to 454. So you could just sit on the sidelines, or you can try put options if you see a bearish confirmation. Look for a bearish confirmation between 455 to 454. My key level already worked out. I don't feel the need and see the need to hit it again when everybody already fucking knows about it. And I made my money on it. So with that being said, I'm going to leave it off at that, right? But I do not want to buy calls this high, and I'd much rather be in on puts at this level. I just don't like how it already played out. But it is showing that it's going to try to have a drop around that level again, and then it's going to have a bullish recovery at a key support level, 452, but likely 450. 450 is such a nice level for calls. That's my analysis. That's my overall thoughts. Now, in terms of just recapping some of the price action, recapping some of the trades, what were some similarities using the 30-minute chart where there was some great confirmations to be buying the SPY? Let's take a look. So I want you to just visually compare this left-hand side right here to this right-hand side right here. And you'll see there's a lot of similarities. Just look at these green bullish dojis. Look at these green bullish candlesticks and see how it's kind of uptrending sideways. Same thing was happening. Green bullish candlesticks, green bullish dojis, and then it was uptrending sideways to fill the gap. Same type of thing happened right here. All bullish reasons to be buying dips and to be buying calls. We say it all the time. Whenever SPY drops back to the low of these 30-minute wicks, it tends to bounce, 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 it tends to bounce. It's truly amazing on how well that works out. If you wait for 30-minute wicks to form with these bullish candlesticks and then you buy the low retest, the bears got absolutely destroyed. The low of this, buy the retest. The bears got absolutely destroyed. The low of this, buy the retest. And then rinse and repeat, rinse and repeat, rinse and repeat, rinse and repeat. That's free money for scalpers all day. Now, another thing was SPY loves retesting the high of these wicks. This is a bearish 30-minute wick right here, but we know it loves retracing back to the high of these wicks. And we also know it loves bottoming at the low of these wicks, at the low of these wicks. Been saying this in my videos for over 2 months now, guys. It's the same type of deal and the same type of pattern with these 30-minute charts. Now, in terms of some other strategies that you could have picked up on, the green, red, green pattern. I want you to take a look at this, man. This is very, very simple. Look at this. See the green 30-minute, and then you see the red in the middle, and then you see the green again. What does it do after that? It starts to uptrend for an hour straight. And then here's the same thing. You have the green right here, you have the red in the middle, and then you have the green again, and then what does it do? It started to uptrend for an hour, and you knew it was likely going to pull back at my key level, like I told you, so you obviously just sell the rip. You don't hold and hope that it's going to break out and turn into support. So that was another key level for calls. And then in terms of other type of strategies for calls, this was my play. This was the play that put me on the radar, and I want to make this very, very clear. In terms of 0-date, same-day expiration option trading, there is going to be crazy opportunity basically every single day past like 3:30 p.m. Past like 3:30, 3:45, 3:50 p.m. There is going to be insane opportunities. I was screaming to buy calls in the chat several times when 0-date call options 450 strike went to 9 cents. The bottom was 6 cents, and they spiked all the way to 40 cents during extended hours. Depending on what broker you're using, you can actually trade option contracts, even 0 dates, past 4 p.m. You can sell those up until 4:15 p.m. with a normal broker. If your broker doesn't allow you to do that, then they're not a normal fucking broker. So anyways, they went up all the way to 40 cents during extended hours, as SPY was still spiking during extended hours for the first like 10, 15 minutes. And with that being said, this was the crazy play that I had on calls. So let me show you and explain to you some of the reasons why I was buying calls. So I began buying at 3:50 p.m. They were 9 cents. They dropped 6 cents. I added on the drop, and then I sold them at like 16 cents. It was like an 80% win, something like that. And they went all the way to 40 cents. So this was the main play, man. I noticed that SPY was downtrending for 90 minutes straight with 3 red candles. And I was looking at patterns and I was telling myself, is there any similarities? And what I discovered was this. I noticed that it was forming basically the same exact pattern. Now I understand this candle right here is green. On my phone, it did look red though. There was some differences, but overall you can see it's downtrending for 90 minutes. It's downtrending for 90 minutes. And then it forms this red bearish candlestick with the high of this wick. And we know SPY loves going back to the high of these wicks. And then you can see when this 30-minute candlestick closed red and bearish, the third one in a row, it had a very bullish recovery at the low of that candle. So I was anticipating that the same thing was going to happen. It drops for 90 minutes. It drops for 90 minutes. It formed this red bearish candlestick. It formed this red bearish candlestick. And then I was anticipating that for the next 30 minutes, it was going to bottom at the low of this candle and continue to go up. And that's exactly what it did. It bottomed at the low of the candle, just like it did right here, and it continued to go up. And I was just looking at a lot of similarities where it would do that consistently. Like you could see right here, it's having this big drop for about 60 minutes straight, and then it bottoms at the low of this candle, and then it spikes all the way back up on the third candle, right? So I was going back throughout the history, and I was seeing where it was going to do that several times. So if my theory is on that last 30-minute candle that it's going to have a bullish recovery like it did on this pattern right here, basically turning this previous resistance right here into a support level, what are some ways that I can confirm that? Instead of just kind of jumping in on the opening of the 30-minute candle, what would be some ways where I can confirm that? You can use the 1 minute and you can use the 5 minute. So the theory was at 3:30 p.m., it was going to start to bottom at this price right here, 453.50, then it was going to start to spike. Now, typically I'll just use the 30-minute chart and get in, but in this situation, I decided to wait a little bit and use the 1 minute chart. So what were my reasoning? What were my confirmations? I'll explain to you right here. So keep in mind, if that pattern that I explained to you were to actually repeat itself, this is how I confirmed it personally. I used the 1 minute chart. I don't always do this, but I wanted more confirmation because the market was closing within 30 minutes, and I wanted to actually get a better confirmation if it was actually going to do that. So what would be the confirmation? Well, the first confirmation would be if the same thing were to happen and that pattern were to repeat itself, it would have to bottom at the low of that previous 30 minutes. So the 30-minute candlestick closed at 3:30 p.m. So that means it would have to start bottoming and spiking as soon as the new one opens up. And that's exactly what it started doing. It had a clean break right here at 3:30 p.m. It started to spike, and then it began to form higher support, and it started to break out. So I noticed that the SPY was holding the previous 30-minute low, and it was breaking out and forming higher support, which means that pattern is repeating itself. So that gave me confidence and confirmation that it was going to do the same thing it did right here, where it had a strong bullish close because it bottomed at the previous 30-minute low and it was starting to uptrend. So as time passed, I noticed, okay, it's getting late into the day. It's 3:49 p.m. And I noticed that the pattern that I identified is beginning to repeat itself. So how can I take advantage of that? I can take advantage of that bullish trend and that bullish 30-minute closing candle by doing this, by buying a dip. And this is how I buy the dip. I will identify a resistance level right here. This is a resistance level. And you can see the SPY broke above this resistance level. So if I want to buy the dip, since this confirmation that I'm seeing, it's trying to close strong, it's reacting bullish, it's breaking out, it bottomed at the low 30-minute wick, the pattern looks like it's repeating itself, it's going to try to close strong. I'm going to try to get in on these 0 dates because I know they're going to explode. So if I can get a nice dip at the previous resistance level that has not been tested, then that's what I'm going to do. I'm going to buy the dip when it drops back down to the previous resistance level after it had its breakout for the first time, because they're going to try to react to the support and then they're going to try to break above this resistance. So as soon as the SPY dropped back down to this previous resistance at 453.85, I started buying calls heavily at 9 cents with the anticipation that was, okay, my confirmation was if it bottoms at the previous low of that 30-minute candle, that means it's going to go bullish and close strong, and that means that pattern that I identified is going to likely repeat and it's going to close strong. So I wait for it to break above resistance, and then when it touches that previous resistance for the first time, I buy the dip, and it should turn that previous resistance into support because it's a bullish pattern, and that's where it's likely going to bottom because, since that resistance broke out, it's going to try to react as the new floor and then push higher. And that's exactly what happened. So this little move right here, I was buying calls in this little dip right here, 453.85, buying my 454 call options, 15 cents out of the money. This little move right here, where it went to 454.20, they went from 9 cents to 20 cents. And during extended hours trading, when the SPY had a small little spike, they went to 40 cents. That's a 300% return in less than 15 minutes. It's just understanding What's the most likely outcome? The most likely outcome was it was going to close strong and they were going to push those 454 calls in the money because I identified a bullish 30-minute pattern, and I understood that it's breaking above resistance. The pattern's working. It bottomed at the previous 30-minute lows, just like happening. History's repeating itself. There's 10 minutes on the fucking clock. So you better believe me, if they drop this back quickly to the previous resistance, it's going to try to react to support. And then those 454 fucking calls that are out of the money are going to pump back quickly in the money for a 100% plus gain. So that's the game, man. And I'm telling you, for those of you with small accounts, for those of you, I'm telling you, 3 p.m. and on, 3:30 p.m., 3:50 p.m., there is phenomenal opportunities to scalp the SPY for very, very quick 50%, 100% returns extremely quick. This is why I love options, man. I will never under fucking stand why losers will sit here and trade AM fucking C. It's up 30% once in a blue fucking moon. Who gives a fuck? The SPY options are going up 100% plus in minutes towards the end of the day, every single day. And people are sitting here and talking about AM fucking C. Are you fucking kidding me? Like, man, that's my little rant, and that's what I would suggest that you focus on. Excuse me. Focus on developing a strategy towards power hour. There is very lucrative returns with SPY, with SPX, but SPX is high risk. But there's very lucrative returns to do that. I'm telling you, man, it's fairly well for small accounts if you understand, how to do it. What's the worst case scenario? You put $9 in the trade. You lose like half of it and cut your loss. Best case scenario, it goes up 100, 200%. Like, the risk to reward is absolutely insane as the time goes on if you can identify the right opportunity and get placed in at the right price like we did. So that was my main play. That's what put me on the map. I put $11,000 into that trade. 10 minutes later, I flipped that to $18,000. I made a $7,000 profit in 10 single minutes off this small little move. That's why all these people, they don't get it, man. They don't get it. If you buy an option out of the money and it just has a small move in the money, 20, 30, 40 cents in the money, that is a massive profit. Like, are you kidding? That's a massive profit. All you people aiming for big moves, you're doing it wrong, man. The money isn't in these massive moves. It's in scalping. You get in, you get out. It's fast money, man. I will always believe that scalping is the best way to trade. You go from scalping to day trading and swing trading. Day trading's in the middle. Fuck the middle. Scalping's the best, and swing trading's basically for gamblers. That's how I see it, man. So I'm gonna leave it off at that. That's my overall thoughts, and that was the recap on SPY. Now, if you do want to be a part of Traders Society, it's gonna be the first link down below in the description. It is a one-time fee. It is lifetime access. I will see you on the inside if you'd like to join. It's instant access. And just so you guys know, we are going to be closing Traders Society temporarily to the public starting end of July. You will no longer be allowed to join. Within time, we will reopen it back up. The price is going to be a lot higher. The servers, the education, the Discord, the chat room, everything will be upgraded and a lot better. We're going to be working a lot closer with members, and we're going to be upgrading the program, the video lesson library, also the Discord servers. There's a lot of upgrades that are going to be done, and we will be raising the price a lot once we reopen it back up to the public. So it's going to be closing end of July. We will be consistently working with members and delivering as always. You will not be able to join past then, and then eventually we're going to reopen it back up to the public. It's going to be a lot higher. So the best time to join is now. And then if you can't afford it, it's not a problem. We're going to be launching a new service to you very, very soon called Sniper Trading. It's going to be a lot affordable, where basically anybody can afford it for a small recurring fee. I'm going to leave it off at that. It's a one-time fee. It's lifetime access for a limited time only. You'll be grandfathered in. Within time, it'll be a lot more expensive, and it will be an annual recurring program. But if you get in right now, it is a one-time fee. I'm going to leave it off at that, guys. It's the first link down below in the description. I will see you tomorrow live at Market Open.